Hope you're all well. It is the Daily Buy Show where we dig all charts as they relate to crypto. Just a quick disclaimer, this is not financial advice. I'm not a financial planner. Do your own due diligence. This is just my view on the markets for educational purposes. It is the 18th of December here down under in Australia. For you legends, it's probably the 17th still. So I hope you're well. Let's get straight into it. We've got some macro headlines that we need to be aware of, okay, that I've just noticed come through. There's rumors of potential some type of war situation with US and Venezuela. We can see that Tucker Carlson potentially has a link from someone in Congress about a potential war with Venezuela. But then if you just put two and two together, Trump put out this post a couple of days ago, I believe, where he's pretty much got Venezuela completely surrounded. He sounds pretty hostile here. He's got a massive, what does he call it? An armada of what looks like a war fleet set up all around Venezuela. And then I just noticed this as well, which is Venezuelan military potentially preparing. Now, look, I don't know whether this is AI, this is something else. It says Associated Press, but just putting two and two together, there's potentially we know that there's geopolitical tensions going on, and that's just something for us to consider, because when you look at the timing of all these things happening and what the markets is already showing us and how we've already been talking about over the past weeks and months, depending on, whether you've been with me on stream or you've been with me on X, you've been keeping up with me, that we're seeing macro concerns. We're seeing weakness coming into markets, with Bitcoin usually being the earliest signal on weakness in markets and macro stress and liquidity stress. And we'd seen it in Bitcoins. Now, what's going on with my chart? Hey, I don't know what's going on there. Let me see if I can I'll save it and get a refresh going. So we've seen it in Bitcoin already, right? If you've been here for a while, you know that I look at Bitcoin as one of the earliest signals on liquidity in the markets, in the system, and it usually responds the fastest. Right, and we've had some liquidity stress. We've been in a tight liquidity environment for quite a while. We've got high rates. This is my market dashboard where I look at Bitcoin over the NDX, over the DEXI, over net liquidity. Net liquidity is just an indicator I built that aggregates the Fed's balance sheet, the TGA, and the reverse repo, and just gives us a nice signal on whether liquidity is expanding, it's contracting, whether it's flat. And hence, we know that for quite a while now, we've been in this environment where liquidity has been contracting, and we're still in a high rate environment. Even with the cuts that we've had and the cut trajectory we still have ahead of us, it leaves us in a very high rate environment. So these aren't the conditions for big parabolas and blow-off tops. Hence, we've seen it in Bitcoin being the earliest signal. So when we look at events like this, geopolitical tensions, and we put it all together with what we're seeing in the charts, and we put together, we see that we're already seeing weakness in the charts that would show weakness when there's potentially a bigger turn coming. We have to consider that we have to take on the signals the charts are giving us and be prepared for potentially what's to come. As traders, as investors, the most important job that we have is to be excellent risk managers, right? So we've got to be able to plan for scenario A, B, and C and manage risk accordingly, okay? So hence, these macro events, all of these different things that I track, all contribute to the bigger picture that it lays the environment, the context for us to play and understand how markets move. So that's one that's lingering at the moment. because typically with war concerns, they're not bullish for crypto markets or risk markets. So if something happens there, if some type of escalation happens, if anything basically happens, the initial response is always markets will sell off, right? Markets will dump, but then we'll understand the extent of what's going on by how markets respond over the following days, weeks, and weeks. There he is, Rich the Legend. Sorry, I just spotted you there in the comments, Rich. Hope you're well. So hence, we got to be aware of these things. The other big piece of the puzzle, or final piece of the macro puzzle for the month, I would say, is Bank of Japan. Now, for me, Bank of Japan is going to be sometime tomorrow. It's the 18th. This says it's the 19th. So we've got the policy rate, right? And that's just another thing that's been on watch, because Bank of Japan rates have been quite elevated, the highest they've been in a while. And they're doing the whole kick the can down the road, in my opinion, scenario where they're potentially, well, from what we know, they're going to hike, right? They're going to hike, but they're trying to do QE to offset the potential damage of hiking, so it doesn't disrupt, call it the global liquidity. So we'll see, right? We'll see what actually happens when they hike and how the markets respond. And we're going to dig around the grounds at the moment, look at the JPY and look at Nikkei, etc. But again, that's another one that we've got to be prepared for, because all of this potential volatility is building towards further downside, in my opinion, and further weakness in markets. So I just want to make sure, I mean, again, if you've been keeping up with me for the past weeks and months, you know my stance. You know that I am macro bearish Bitcoin, right? We're in a macro downtrend. If you've been keeping up with my Substack, which I do weekly, I've been calling out exactly what I'm looking for in order to be bullish, but also just even in terms of any type of counter trend rally, I've been calling out what type of liquidity catalyst could drive that kind of move. But most importantly, I've been laying out exactly what kind of data and signals you need to be tracking to be able to potentially get ahead of those kind of moves. And we've been doing it together on stream. But so far, the data and the price action has just continued bearish, like continued weakness is all that I've seen. Bitcoin, just a quick refresher, I'm high time frame bearish because the weekly structure is bearish, the daily structure is bearish, the weekly bands are confirmed bearish, the weekly order flow is bearish. So again, if I'm to be bullish, I'd just be going against every signal and system, which is a very dangerous place to be when you're not paying attention and honoring your own system, right? So before actually we jump into Bitcoin, let's go around the grounds. Now, we should get another liquidity data grab over the next 24 hours, I believe. The Fed updates their data. So that will give us a little update in net liquidity as well. So we want to see if this is continuing to sort of move its way up slowly, right? If it continues to move up, I'd expect there's always a lag before liquidity actually flows through to markets. And then most importantly, we'll need to assess price action because ultimately price action will either confirm or reject our thesis in liquidity, right? So typically when the liquidity expands, it should drive bullish price action. However, if this is only expanding slightly and it's not driving enough liquidity, that's how we'll know when we read the price action. If Bitcoin's not trying to put in any type of bullish structure or any lower time frame reversals, it could just be straight out rejecting the fact that it's not enough liquidity, or it doesn't believe that it's going to be sustained liquidity, right? It might be turning over. So we'll need to keep an eye on these things, but we'll get our next data read within the next 24 hours, I believe. Our risk dashboard, right? So this is the dashboard we track that gives me a good signal across risk markets. Because if you're just tracking the NDX and the SPX alone down here, you're always going to be behind the ball because they top last, right? So Bitcoin's always the earliest signal, and we've seen it, right? It's already macro bearish. The NDX is another. Between the NDX and the RTY, that's where you'll start to see the bearish divergences, and you'll see those start to turn over before the major indices turn over. And what are we seeing? We've been seeing the NDX starting to put in those divergences with the SPX, which what it historically does when there's a major turn coming. And we've seen it just being weak. We've also seen the RTY poke through the all-time high, but now it's turned back over. Okay, so that to me, we'll dig into that in a moment, but it looks a bit more aligned to distribution, like a distribution top rather than a price discovery or a continuation rally. So we'll dig into that, but just the summary here is that our risk dashboard has been flashing early warning signs, and now they're developing into high cautionary signals, okay? We put that together with the macro, some of the other macro concerns that we're seeing, potential war concerns, Bank of Japan, which we'll get this weekend. Now, the other things to consider as well is we're coming into year's end, so we get a lot of the funds closing up their books, but you also get a lot of tax loss harvesting, right? So all of these things could drive prices lower. It could drive, whether it's some type of capitulation into a local low or not, we'll analyze it as it happens. But we just got to keep on top of the fact that these are all very real and meaningful bearish kind of narratives or concerns we got to keep on top of, right? So charts are flashing warning signs, and we've got the right narratives to drive us lower, okay? So let's just keep that in mind. Now let's do our round the grounds before we come back to Bitcoin, because it is, there's some important data in the macro charts that we need to look at. We don't need to look at anything in the yields, right? Because we know that the trajectory, we're in a high rate environment. There's nothing that's changed the trajectory. We had the softening labor. I put out that post on softening on X regarding softening labor market, but my conclusion was that doesn't make a difference because the Fed doesn't come in and they're not ahead of the curve. They're not going to just jump in and start changing things because of a softening market. They're going to wait till something breaks, okay? And the data that came in on the labor market a couple of days ago didn't show anything breaking, just showed continued weakness, right? So DEXY, now you know that we've been tracking the cycle ending pattern, which is in place still. Base macro bullish trend commences confirmed with the weekly bands, okay? And these bands are free. If you want these bands, just DM me on X and I'll give them to you. Now, when we dig into the DEXY, as we've been discussing, this FOMC level in the short term is a key pivot level for us to understand whether the market is taking on risk or whether they are just straight out rejecting and moving out of markets, like moving risk off, right? So this is what we'd see if they're going further risk off, because again, just think about the gesture of the Fed. What the Fed does when they cut rates is they're trying to incentivize participants to potentially take on some more risk, right? That's why they're making money cheaper. So if the DEXY doesn't push lower from the day that the rates became lower, okay, that means the dollar's actually strengthening, meaning that participants are moving into the dollar, not moving out of it, not deploying their dollars into the markets, right? Or into other currencies or wherever it is, right? It means it's strengthening. So hence, that's our short-term gauge on, risk off, whether the risk off is going to accelerate, right? And if risk off accelerates, we should see DEXY charging up here. And now for the historical pattern to start confirming itself, we need to look at the weekly chart, right? And we need to trend back above these levels, and the bands will cross green, right? And that would signal bigger stress and warning and will likely align with global markets going deeper into a bear market and essentially lower for everything, all risk markets. Okay. Now, we talked about oil on, I believe, yesterday's stream, so we won't talk about oil. There's nothing meaningful that's changed yesterday to today. The indices, right? These have been a focus of ours of many of the streams, because you'll remember when we were back through here, I was expressing caution, right? Because we tested the daily structure lows. We'd had consecutive closes here. I'm just looking at the DJI, right? After sweeping the highs, we had the bands flip, and our macro environment was also screaming, or not screaming, I should say, was turning, right? So liquidity tight, etc. And these markets, from the DJI, the SPX, the NDX, down to the RTY, were all giving us our initial warning signs, okay? And we went over this, where this daily structure low, typically in a strong bull market or a strong bullish trend, the daily structure low doesn't get breached in this way, okay? Sometimes it can be tested, but there's some key triggers to look for, right? If the high's swept and then it's tested, that's a big concern. When the bands cross over, that's a big concern. And when we start closing below the structure low, that's the market showing its intent. So when it pulls back, right, it's likely going to continue. So hence we had this signal, especially in the RTY and even over here in the DJI. Okay, we had this sweep, right? Sweep. We had the low here with consecutive closes below, right? And that's why I've had this marked up for some time with the arrow pointing to it. So it just keeps us alert on this signal. And now we've come back into the highs. And if you remember what I was discussing in recent streams, I said that when you get these signals, when the structure low has been breached in this way or tested in this way, you're not out of the woods until price is actually trending above the high, okay? Because the problem we face in these bigger distributions is sometimes you have consecutive tests of the high before demand is completely exhausted, and then it just turns over, right? So you'll see it. So here, for example, we had first high test, then we had the structure low, and this was our big sign of intent, and we had the bands crossing. Then we came up, and like I said, you got this phase here where this is over potentially a few weeks, where we test this high, and in this instance we couldn't even just get back above it, couldn't even sweep it, and look how it turns over, right? Demand gets exhausted, sell side steps in. That's why these bigger distributions over here, right? So this is the 2021 to 2022 bear market. You see it starts happening where, right, if we just go right back to here, you start getting these initial tests, pushes up, okay, made higher lows, pushed up, highs are weakening, came down. Now let me just clean this up again, right? Now here's where we needed to be paying attention, where this swept the high, came into this low, and look at the closes below the low, right? And then you just factor in, cool, we're testing, not making very high highs. You got this trend being respected here, okay? You got the bands flipping, and ultimately, if you look here, the weekly gives you a very clear picture. When that weekly structure low is, especially when the weekly structure low is lost, right? Look here, that's the weekly. We're heading to this deeper move. But what I'm saying is it takes time, and you're not out of the woods in these bigger distributions once you get that heavy structure low test, right? So hence, these have been on watch, and some of the other signals we've been using have been the FOMC level, right? Because again, just like it's our barometer on the DXY, it's our barometer across a lot of the major charts, because the Fed is trying to incentivize people to take risk, right? in some way, shape, or form. Maybe it's mild risk, whatever. But the gesture of cutting rates is to make money cheaper for people to take on risk. Okay, so we see it, right? Heavy test, bands crossed. Now, if the Dow's trending back below here, then it's losing this internal daily structure that's holding up this leg of price. So if this low is lost here, it's likely that we're coming down to here. But again, I note this FOMC level and we're rejecting it so far. Okay, so in the short term, if market participants are willing to take on more risk and are willing to accept the Fed's gesture of cheaper capital, right, should be above here, right? We should be up. So hence, these markets have been flashing caution. We've been watching them for some time, and the caution signals are building, and we've just got to be prepared that, now I'll mark out this weekly low. Now, the weekly structure isn't officially bearish until this low is taken out, okay? But this is a significant move in the indices. That's a further 5% or so down, okay? And then that's likely, if that low's taken out, see if you see it here, right? The weekly low, or even if you wanted to use this low here, once that low's taken out, we're going much lower, right? And I'll just go back even. We'll jump on the SPX and I'll show you how significant these weekly lows are. Here's the weekly low, right? Once that weekly low is taken out, so if you're an equities trader and you're a swing trader, this is a good little bit of structure that to pay attention to, because go back test it yourself. The weekly low rarely ever in equities, I'm talking about the key equities, DJI, SPX, NDX, they rarely ever get closed below without it turning into a bigger drawdown, right? A bigger trend shift in the trend. So here's the weekly. This is the SPX. Once that weekly was getting closed below, look how much deeper it went. Here again, okay, all throughout this leg, the weekly never gets tested. So if you're looking at this section here and going, hold on, it's bearish, well, that's a complex pullback, right? That's internal weekly structure. The weekly low's here, okay? Because look, here, and then from here to here, there's no low. Oh, actually, sorry, there's one low. No, but that's still an internal low. So once this high was broken, okay, from here to here, this is the lowest point. So that's the low. Right now, if you want to learn how to do market structure like I do market structure, just go onto my channel, go into my building block series, and I've got videos on market structure, primary versus internal, complex pullbacks, all of that, right? Trading, if you just mastered market structure, you can create a huge edge in your trading, right? Because there's lots of, I see it can be quite subjective, as with the nature of trading, it can be quite subjective in the way that people look at market structure, because in theory, all it is higher highs and higher lows, right? Lower highs and lower lows, or equal highs and equal lows, like in a range, okay? But there's nuances to it that I share in the way that I do it that I think you could use to create a massive edge. So just check those videos out. They're in the building block series. But you can see here, see the weekly low, that's the weekly low. That's the new weekly low. That's the weekly low. That's the weekly low. And if you look at here, right, so that was the weekly low up until here, high gets taken, that's the weekly low. Where does it go to? Well, it comes down and sweeps the last major weekly low, right? So hence, we see this, we see the sweep here. You start looking for, just like we were looking up here, the inverse triggers, right? Now on here, if we flick to the daily, the edge you could have exploited here was you got the weekly sweep, okay? And then you got internal daily structure turning over, creating internal price action. So there could have been some type of, if you were also looking at the market context at that time and seeing that the environment's changing, potentially liquidity pictures improving, to add to confluence that this price action is trying to tell us we're moving bearish. Well, there's potentially trades there when that turned bullish and you're trading pro trend with this internal bullish trend, and then the primary structure. So this is primary bearish, okay, until you take out these highs. So then you could have gotten in early on the trade here, and then when this was inverted, now your primary and your internal are bullish. Okay, you can add to your trade on this pullback, and there you go. Like there, you can see how it unfolds. So hence, you can see how market structure is a massive edge. And if you just go through my building block series, you'll see exactly how I do it, which I believe is a bit nuanced and a bit different. So if you can get something out of it and use it in your trading, then that's awesome. I'm glad that content serves a bit of a purpose. But anyway, didn't mean for this to be more of a market structure deep dive. But you can see here what I'm pointing out to you is this is what we got to be aware of. When these bigger indices lose that weekly, and it often starts with the daily and these distribution signals on the daily, right? We're going to be in for a bigger correction, right? So hence, I'm going to mark this. Well, these levels cover it. I'm just going to relabel these as daily and weekly. Okay. Now, if we're trading, if we get weekly closes below here, it's likely we're coming. You'd have to assume, because you look at this whole run up, right? You could potentially take a weekly in here, which marries up with somewhat of a half 50% of the range. You have to consider how far down this thing's coming, right? Is this, depending on the scale, like that's a pretty big pullback in the SPX. But if we just go back and look at some measured moves, it's not that out of character, right? This is a 21% pullback during still somewhat of bull market conditions, right? Now, this was our last bear market where the Fed regime was actually changed from bullish to bearish. And if you look at that, 27 and 28%, right? So we've got a regime change happening at the moment. The interesting thing is we're coming out of somewhat of a relatively tight regime into potential loosening, but it may not be fast enough. So you got to remember, when the markets turn, okay, usually what will happen is you get what would you call it, like early signals. You get market stress, okay, you get market crash, capitulation, or damage, right? Then Fed steps in, okay? This is where Fed steps in aggressively, usually behind the ball, right? Fed steps in, loosening, okay? But you got to remember this, when you're looking at these phases, the damage happens first, usually, when the Fed steps in, or when the Fed steps in or signals that they're stepping in. Like timing this sequence it can be the challenging part, because you don't want to step in at the market stress, so you don't want to be buying too early. And the Fed stepping in there's often a lag between when the Fed steps in and when the conditions actually improve. So you got to wait for the turn, right? Then the market recovery starts. So if you look at where we are currently, I would say we're still somewhere between early signals with early market stress. We're nowhere near crash, capitulation, or damage yet, right? Just look at the DJI, the SPX, and the NDX. So if we are following this path, okay, then if we are following that path, we're still in the early phase, right? So and that might not go to the market stress and market damage, but again, that's why we're looking at everything along the way, because we're trying to assess how far down that path do we go. How early is the Fed going to step in? What impact is it going to have? Okay, those are all the things we're considering. We spent a bit more time on this than I anticipated, but I think it's important because we already know Bitcoin is bearish. Now we're trying to understand to the extent of how bearish things are going to get, right? That's where we're at. NDX, RTY, we went through these on the risk dashboard. Now futures have opened slightly bullish, but that's meaningless at this point in time. We're not seeing markets race or rally higher to suggest there was some unwarranted mispricing of something. Like this is just this standard. The other thing I want to note is if we notice all of these bearish divergences or weakness coming through the Mag 7, and the Mag 7 props up the SPX and the NDX, right? So Tesla, not the kind of candle you want to see for a sustained breakout. So you'd be hoping that today or tomorrow's final day of trade for the week doesn't give us another heavy red candle, because that's well, essentially it's a failed breakout, and we got to consider distribution risk there too. And considering that a lot of these other charts have already started their turn, this is what happens when there's weakness coming. The Mag 7 will turn before the SPX and the NDX turn, okay? So we're seeing the turn, right? Google's still there, but is also turning. Microsoft always turns very early, right? It kind of is the most extreme case. Apple often turns late, and my speculation on that is Apple's not a pure play SaaS, like software business. They're almost a lifestyle brand, right? They're a luxury brand rather than a pure tech play. So hence they kind of hold out for a bit longer, but even they're turning. So we're seeing all this broad weakness. Okay, so caution signs are increasing. Now, when it comes to Bitcoin, Richard's favorite chart, okay, we've got the stablecoin dominance. And legends, I cannot stress, anytime you see this, I cannot stress this enough. Anytime you see someone on X calling for a bottom, please load up this chart, because this chart is what's going to tell you whether we're anywhere near a bottom or a top even, okay? So this is the chart that helped guide me. Obviously, Bitcoin price action comes first, but this is the chart that helped guide me buy Bitcoin from January to March, right through to April in 2023, and helped me to sell it, guide me to sell it all through. Well, I sold in January this year, and then I offloaded most of it in September again, right? So this is the chart that you need to load up anytime you think we're near some type of bottom, because I see so many people on X over the past week or 2 weeks already calling bottoms and, this is it, this is the bottom, or, buying more here, all this sort of stuff. When one, if you just consider all of the conditions that we just went through and the macro backdrop, the environment, it's not conducive to price discovery parabolas. Two, when you load up this chart, it's supporting the bearish thesis where if this continues to trend up, okay, as it is, and we're now starting to see it break through here, we're going much lower. Like Bitcoin and crypto can go much lower. You can see it here, right? So you see the pattern where we've got this multi-year, multi-cycle trend line. Okay, and when Bitcoin comes into these lows, this is where major tops are often put in. Okay, then what you specifically need to look for is using my weekly bands. When the bands turn bullish, when they turn green, and you can see that weekly and daily structure is bullish, that is a massive signal that participants are moving out of crypto and into stables, right? So this is a massive risk-off signal. Now, if you've been here for the last few streams, we've been talking about this pivotal level because, as you can see here, once we confirm these signals, the structure bullish, the band's bullish, once we broke out from this range, we were starting to enter the deep bear market territory. Okay? We're now starting to break above that range. Now, I will point out at some stage a counter trend rally will happen, but as long as you're here with me on this channel, right? I'm here every day at the Bitcoin close. As long as you're here with me on the channel, we will analyze all of this together, because the last thing you want to do is get trapped in a counter trend rally thinking it's the start of a new cycle. Okay, and we'll be looking for these specific signals and triggers that we've seen in the past, but also that just work, and we'll be watching the bands, we'll be watching structure. But there will be a counter trend rally at some stage. We just got to remember though, the macro context is bearish, right? So we've got to play accordingly, plan accordingly, and manage risk accordingly, right? So hence, this is on watch, because we're seeing this breakout now, all right? So if this is going to keep trending up, crypto's in for a lot more pain. We'll finish up on Bitcoin, right? There's not much to share that's changed since my last couple of streams. Quick refresher, we're talking about this flip zone, okay? You know, there's no reason to be bullish at all right now. We're not even anywhere near the flip zone, but this is basically the level that I was saying, well, if the bulls want to take some type of control, meaningful control, they need to get back above the weekly bands that are currently bearish, that flip bearish when we're in bear markets. They need to get back above this weekly fair value gap that's on the sell side, that's showing that sellers are still in control, and they need to repair the daily structure, and to flip daily bullish structure at this point in time, they need to get up above here. Do I see it happening in the short term? Not really. Bitcoin just looks too weak, but look, anything's possible. And again, I'll be here every day, and if we see things turning, we'll be able to track it together. But right now, it's not looking likely. And on the shorter term, again, we were calling out the FOMC level. And if you remember specifically from yesterday and the previous days streams, I said, since the FOMC week closed as a sweep of these highs, okay, which were inside-outside bars showing that buyers clearly don't have control of the market. When this closed as a sweep, I said that this week I was looking for shorts, okay? And then on yesterday's stream, I specifically said I was looking for any retest into the FOMC level, because ultimately this is our short-term barometer. If participants are taking on the Fed's gesture to take risk, they should be getting above this level, the FOMC level. So that's my short-term line in the sand, where if we're above it, I pause and reassess. Laid it out here in my Substack. I said Bitcoin above the FOMC level, I'm focused. Below, I'm focused on shorts. Above, I pause and reassess. Now, what do we have overnight? We had that perfect daily retest into the level. Now, here's one of the challenges of being here in Australia. This happened at 1 a.m. for me. I'm not awake at 1 a.m. So unfortunately I couldn't get the entry that I wanted, but totally fine. I'll sit here, I'll be patient. I'll see if I can get another entry into this thing and work out how I want to trade it on the lower time frame, or if I want to wait for another signal to potentially trade it as a continuation. But just last but not least, as I was saying in yesterday's stream, I was expecting a deeper retracement, okay, to get into the macro short for continuation. That's the bigger trade. But given the circumstances and given the way price actions developed, I accept that this could be it for the next weekly high, okay? But because it didn't come so deep, because we didn't get right up into these levels here, I'm just a bit more, I increase kind of the probability that this just could be a range, because we didn't come so deep to, you know, refuel. Usually when you get these nice big retracements and then momentum gets lost, we've refueled along the way. There's so much liquidity to take on the way down, okay, to fuel a big continuation. Because we haven't really got that, and we've been quite choppy already, we've kind of generated liquidity. If we look on the 4 hour, we've now got, sorry, I shouldn't lean back like that. We've now got liquidity generated on either side. Okay, so when I look at this, that's why it makes me go, okay, if this is it, and this is the new daily high coming in, right? Because you remember this is the daily structure. You got the high there, and since we came down to here, we haven't created the new daily high. So if price is going to keep moving bearish, this could be it, and then we come down to at least here, but for continuation, maybe it's down here. But again, just layering in some of the additional chart context now, because we haven't come as high up as I thought we would, and we've been quite choppy through here. When I analyze price on the lower time frames, we've now generated a lot more liquidity that can be taken on either side to create ranging price action. So you see here, this is all untapped. Like even here, we just came up into here. This leaves a massive liquidity pool still here. So hence why I would still be interested in this FOMC level, and hence why you can see how this is now building up to be a bigger level, where if we come up into this FOMC level again, right, you should get seller stops getting triggered, which would push price higher. Okay, once it pushes price higher, we need to see if it's going to keep squeezing all these stops, because you will get some participants chasing the market up. So we need to see if it's going to chase it up enough to trigger, right? And you might get that reaction up into here. And then if it fails, that's going to be a big short trigger, right? Because what that essentially is telling you that is, despite all this is all just seller stop liquidity that got triggered, right? And then if it fails, it tells you that there isn't actually new demand and new buyers fueling that move to continue higher. Okay, it's just sell stop liquidity, and that's where then you'll get the market participants going, okay, cool, it was a liquidity hunt, or it was a manipulation, all that kind of stuff. When really I just think about how markets move, and that's how I think about it. I go, cool, so we took all the stops, and when you take stops, it means that sellers need to buy positions. So it's like them buying longs, right? Which would push the market up. But if we don't get follow through, that means that it's not true demand. It's not true buyers, new buyers stepping in. It's actually just sell stop liquidity. So when that fails, that's the signal on, cool, we've cleared out all that liquidity. Now the liquidity pools are to the downside, right? So hence we should move down. But basically, just coming back to what I was saying is, I'm okay with this being the daily high, but I'm conscious of the fact that this could develop into a bigger range now because of the liquidity that's been created other side. So my first point of interest is back into some of these levels here if we do get another test, and I'll be interested to see if the FOMC level holds and we get those squeezes and there's not even enough buyers to just bring us up further into these highs, and it just turns over there, then I would take that short, and I'd just be looking at down into these levels again. All right, whether we get it or not sure. It's just how I'm kind of looking at it and planning, but essentially we've got that. So we got liquidity pools here, right? That's the major trend liquidity that's built up with the pools along the way. Okay, this liquidity's all been taken. We're building liquidity here. So in the shorter term, you might see this sweep, and then maybe it comes back up to here, and then it comes back down to take out all of these liquidity pools into a range. And then, you know, it's potentially going to come back up for this liquidity pool, maybe up here, and then that's the bigger macro trend short, right? So these are all the things you got to kind of be looking at when you look at the charts and when you look at how price develops. And the key thing is, where is liquidity? You've got to be able to identify liquidity on the chart. And I'm going to do a video on this in my building block series soon as well, where I just go through, I guess, my take on liquidity and identifying liquidity. Actually, if you're watching and you just drop a comment after this video, if that's a video you're interested in, I'll do that pretty soon. But anyway, that's how I'm looking at it. So in summary, this could well and truly be our next daily and weekly high. That takes us at least down to these lows here, because we didn't go as high as I thought we would. And now we've built liquidity all through the range. This could be a bigger range like this, okay? So if you're trading the bigger range, it's always better to just observe price at the extremes. We've got our FOMC level as our short-term barometer, okay? I'd be looking at price action above here, and I'd be pausing to reassess, not just blindly shorting above there, but into the level and rejections, taking out that liquidity, and I'd be looking for continuation down into here. And the only real long setup that I may be interested right now, again, is now just considering that this could be a bigger range. I probably wouldn't touch anything through here. Not probably wouldn't. I'm not going to touch anything through here. I will, my ears will perk up a little bit down at this level here, because this would potentially form into, if we just jump out onto the monthly, right? This is our December candle. This could potentially set up. Why I'm interested down here is if we do get a monthly sweep, you see how major pivots happen with monthly sweeps, right? So if we get a weekly and monthly sweep of November, that's why I'm more interested in a long potentially down here. But again, if you're with me on this channel, just come back and I'll be calling it as we see it, right? That's it, legends. Thanks, Rich. Appreciate you, legend. I'll speak to you soon, and for everyone else, I hope you enjoyed that stream. If you did, please leave us a like, subscribe, comment. I'm trying to get to 100 subscribers before the end of the year, so I need one a day. So if you haven't subscribed yet, that'll really help me out a lot. I'm on X as well. Have a good night, Rich. Have a good night to all my UK friends, and good evening to everybody else. Thanks, legends. See ya.